Hello everyone and welcome to the broadcast. It's Brett Hill here from Broadstone. Delighted to say our guest today, our very special guest, is a long-time former colleague and good friend of mine, Mr. Iain McMillan. Iain, welcome to the broadcast.
Thank you, Brett. Nice to see you.
And you. For those very few of you who won't know Iain, he spent his whole career in the UK medical insurance market, having originally started out as a business development manager in Scotland before working his way up to the dizzy heights of leadership positions in major insurers such as Standard Life, AXA, and most recently as distribution director at Bupa. Iain's also held leadership positions in insurance broking and occupational health businesses, giving him perhaps a uniquely rounded perspective on the UK's private healthcare market. Iain now runs his own consultancy business, IMC Consulting, and we've invited him along today to share his reflections on 33 years in the UK private health insurance market. So, to kick us off then, Iain, I guess the first question is, having now had the opportunity to take a step back from the day-to-day merry-go-round of working at the top of large insurers, what are your reflections on where we are as an industry today, the good and perhaps the not so good?
Yeah. Well, I think my overall summary would be we're in a much better place now than we were all those 33 years ago when I first came into the industry. I always think it's interesting. Back in those days, brokers particularly used to say, insurers are not innovative enough, and nothing ever changes. But actually, if you look back that timeline, you go back to a place where medical insurance was very simply to pay for claims for insured conditions and nothing else, and it was a common conversation that we used to have, particularly with customers when they went in for something like an annual checkup to make sure they were still okay, and we would say, well, that's not covered. Yeah, but it's £50 and it could save you thousands in a future claim. Tough, it's not covered. And we've gone, maybe not full circle, but the industry's much more focused on keeping people fit and well and healthy in the first place nowadays than it was back when I first came into it, and you, of course, few years after me, obviously, because you're not quite as old, but you'll remember. Yeah, you'll remember those days as well. So I would say, generally speaking, it's going in the right direction. As an industry, it could always go faster, and we could always be doing more. But there's clear recognition that we need to continually be doing more and more to keep people healthy and at the same time fully embrace digitalization and use of AI, and all with the aim of managing costs for the long term. So there's a lot of good stuff going on, and the industry is doing well, as I say. If you were to go into what's not so good, I think customer service has never been good enough, in my opinion, in all of those 33 years. You typically want to speak to your insurer when you need help about something. And I've never ever thought it's acceptable to be kept in a long queue listening to hold music and being told that your call's really important to us, and then finally get through to somebody who does their level best too often to demonstrate to you that it's not really important to you. That's got to get, it varies between insurers, obviously, but it's got to get better. We work in a service industry, and I think it's therefore beholden on us to be delivering decent levels of service. And I'm always reminded of a phrase that I saw over in the States, actually, who do customer service, generally speaking, much better than we do in this country. And it was a little quote on the bottom of a restaurant bill, which just said there are no spare customers. And I think when people actually start to realise that here, maybe we'll give a better service to the customers that we've already got, rather than run the risk of losing them. There's a snapshot of the good and bad in the world of Iain McMillan for you.
So thanks for that, Iain. You raised a couple of points there I'd like to pick up on, partly around the risk of losing customers and partly around what has been a very positive shift in the industry towards wellness, a recognition that money spent, a small amount of money spent today helping customers stay well will prevent a large amount of money being spent tomorrow on claims. The challenge, of course, with that, as with any healthcare system, as the NHS is facing, is trying to invest in the preventative well-being of tomorrow while still covering the cost of people's treatment needs today. Yes, investing in well-being will yield benefit in the long term, but you're still having to pay today's claims at the same time. And we have, of course, seen claims go up significantly in the last few years, both in terms of the number of claims and the cost of some claims, such as cancer. So that's pushing up the cost of private healthcare benefits quite significantly over the last 2 years. And now, of course, insurers who are employers and business customers who are employers are seeing an additional cost burden with employers' national insurance. So what's your view on where we are with affordability pressures? And do you think insurers, intermediaries, customers are doing a good enough job of understanding the pressures that we're all in different ways facing at the moment in the industry, and how those pressures impact us as businesses?
Yeah, well, you touched on some of the pressures there. Certainly customers are in the main are under immense pressure. The latest one being the employers' NIC costs, which have shot up quite significantly. I saw an article, or actually it was just a comment on LinkedIn 4 or 5 weeks ago by somebody that I follow who has his own business, and says for the first time ever he'd been writing 2 checks. One was for the payroll for the people's wages to be paid, and the other one was to the government for the tax and national insurance. And for the first time ever, that second one was bigger than the first one. I mean, that is a horrendous situation that the country's got itself in. So there's no doubt about the pressures that customers are under. The insurers are under pressure to control those claims costs, whilst at the same time forever improving benefits. And then they've got this other pressure that they're trying to see into a future that's dramatically different to the one that existed pre-COVID. So they don't have it easy. But again, I was reading an article just last week. It was an interview with one of the CEOs of a major health insurer who says, current premium increases are not sustainable. And I think everybody realises that. The $64,000 question, and I don't know the answer to it, is how do we get them back under control? And I don't think there's a quick fix. There's loads of long-term stuff going on, but in terms of getting those costs back under control now, or for in time for the next round of 1st January and 1st April renewals for large corporates, I think that's a big challenge. The pressure then that brokers have got has been sort of caught in the middle of the customers and the insurers, and have a particularly difficult job, which is trying to do the best for both parties. You're always trying to look after your customers' interests. That'll be your number one priority, but it's not in anybody's interests to be sort of forcing, if you like, insurers to quote the wrong price for business, because that's only going to unwind at a certain stage. So from that point of view, I think the industry's in quite a tricky situation, and this industry is much more innovative than people give it credit for. So things like increasing use of pathways, for example, will help to control costs. We'll see much more of that, I think, moving forward, and there'll be other things that will be brought in which will help to keep things under control better than they are just now. But there's no doubt that it's medical inflation we're talking about here is a particular challenge in the last couple of years in particular.
Definitely, and you mentioned pathways there. You and I are both old enough to remember working at Standard Life when they first launched a directional care product, guided option, as it was at the time, quite new at the time. And I remember there being a lot of debate about whether to make that an option that customers could apply to their policy to reduce the premium, or whether to make that the standard product, and customers would have to pay more if they didn't want directional care. We saw sometime later Bupa go through a similar dilemma when it rolled out guided option across its corporate healthcare plans. And we are today still in a world where sort of full choices for standard proposition and directional care products are seen as discount options, albeit directional care is creeping into some diagnostic pathways within standard products. But given those claims inflation pressures, those cost pressures, do you think we're approaching a tipping point where the market finally flips and directional care becomes the standard, the default product, and customers do have to pay more if they want complete choice over where and when they go for treatment?
Well, the short answer to that is yes. And in fact, I'm surprised that hasn't already flipped. And maybe be a question for some insurers to say what percentage of your business now is directional care as opposed to the full all singing, all dancing, be treated where you like. And I suspect it would be a much closer balance now than it's ever been before. I think you could easily get to a situation where directional care is your only option within the next few years, simply from a cost control point of view. And it's easier for an insurer, to understand and operate on that basis, in my opinion.
And I sense customers are increasingly ready for it. Certainly business customers, employers are increasingly ready for it, because when you go back to sort of the early 2000s, when a typical waiting time for an NHS procedure might be 8-9 weeks, then private medical insurance was about the benefits of speed and choice and convenience. When you're in a world where the waiting time for an NHS procedure is 8 to 9 months, and employers are funding ever-increasing costs of healthcare, it is ultimately all about speed of treatment and getting those employees back to work. And I think that really is going to become the focus for a lot of employers in the coming years. Yeah,
it has to be. I mean, the landscape has changed out there. There's no doubt about it. It was, particularly driven by COVID and lockdowns and what have you, but it was heading in this direction anyway. I think lockdown in particular just accelerated it in this country. But there was always going to come a tipping point, I think, in terms of directional care or not directional care, and there was always going to come a tipping point in terms of when our premiums starting to look unsustainable. I think we're reaching the two of them at roughly the same time now. Hopefully the former will help resolve the latter dilemma that we've got.
Yeah, certainly. And you mentioned there's something I was going to ask you about, actually. You mentioned lockdown. You were at Bupa in a senior position back in the pandemic, back in 2020. It feels like a very long time ago for many of us, perhaps because we don't like to dwell on it. We don't like to think about it. It was a very painful time for many people. But could you just share with our listeners what it was like being in a senior position at a private health insurance company, and all of the private hospitals have closed their doors because their facilities, their equipment, their staff have been sequestered by the NHS? Were there concerns about whether customers would cancel their policies, en masse? How did that feel? What was going on in Bupa headquarters at the time?
I mean, thinking back on it now, just gives me butterflies in my stomach again. just thinking about it, it was a absolutely hideous time for the country. And we were all affected in different ways, and I think the long-term effects of that whole period in time will be seen in this country for a long time. In terms of being in Bupa, Bupa, with all due respect, wasn't my biggest concern. It was the health of friends, family, and colleagues, and making sure everybody was okay. But when we started talking about this challenge that had come along, specifically that customers couldn't access hospitals and GPs and dental practices, and the dental practices was an interesting one. A lot of people don't think about that, but I knew a few colleagues who had toothache at the time and were getting do-it-yourself dental kits sent to them to try and resolve toothache. Just think about that for a minute, how horrendous that was. But there was actually a step back before you start thinking about how do we deal with this. It was actually, how do we keep the lights on in the business? Because we're going back to a time where, I can't speak for other insurers, but certainly in Bupa, and not everybody, in fact, very few people had laptops as a standard issue. So customer-facing people in particular, they all came in the office. This was before the word hybrid hadn't really been invented then. So you're in the office 5 days a week, sitting in front of a couple of screens. Then suddenly we had to say to people, you can't come to the office again for the foreseeable future. But they couldn't log on to do their job. So there was a crazy period of time where we were trying to buy, numerous thousand Dell laptops and get them out to staff. And I had managers. I sent one of our managers into PC World, believe it or not, said, buy as many iPads as you can, put them on your company credit card. And then we had the team managers driving around, delivering them to their staff and leaving them at the front door, chapping the door and running away, so that they weren't too close to them. So it was things like that were just absolutely ridiculous. But in terms of the access to the hospitals and dentists, of course, everybody understood that predicament, all customers. And in fact, none of them really want to be going into a hospital at that time, or have somebody poking about in their mouth. It's a bit too close for comfort when we didn't really understand what the effects of that could be long term. And then we start moving on then, and we start talking about, we're going to have to give some return of premium back to people who can't use it. That was a massive job, trying to work out how to work it out. Turned into an industry in itself, and on top of that, we were trying to work out what would happen with the business long term. I remember being asked to do a forecast, in terms of the business plan, and it was pretty downbeat. I have to tell you, I was basically saying, well, new business sales will stop, because who would buy medical insurance when you can't use it? Lapses are likely to go up, because a lot of businesses are going to go out of business. The ones that manage to keep their head above the water certainly will reduce in size in terms of the number of employees. So at best, we can expect the insured population to shrink, and it's only a matter of by how much. And that did happen for the first couple of months. And then suddenly it was as if somebody had switched a light on, and actually everything started going up the way. And I remember the then CEO, Alex Perry, a few months later, saying to me, oh, you got that forecast badly wrong, didn't you? And I said, well, to be fair, Alex, I used all my previous experience of lockdown-driven pandemics, or pandemic-driven lockdowns, when I was doing the calculations. And that, I think, it's a serious point. Nobody been in that position before, irrespective of what sort of angle you were looking at it from. So it was really, really difficult to know what the right thing to do was. And I don't think, I'm sure I can speak for all insurers here and say we didn't always get it 100% right, but we were blooming well trying our very best. And that's all we can say about that. And we've all come out of it probably in a better state than we're in. And just lastly, one of the things it did do was it really forced Bupa, and I'm sure other insurers too, to be delivering things quickly. In terms of benefits, online GP, MSK pathways, etc., were appearing almost overnight, and I feel actually that the industry's gone back a bit from those days, and it's drifted back to this will take 12 months or umpteen thousand man hours to deliver something. But it proved 5 years ago that didn't need to be the case. You can get stuff out on minimum value propositions, and I wish insurers would do that more often. Now,
it's certainly true to say that I think before that time, product development cycles in the PMI industry were painfully slow. It could take often 2 to 3 years to get something to market, and then suddenly, as you say, things were happening in 2 to 3 months. I mean, the mass digitization of healthcare, of primary care in particular, but more generally, innovation in terms of ways of customers interacting with insurers and new benefit features. I think the industry did carry some momentum out of that. I think you have seen a little bit of an arms race continue, not just in the PMI industry actually, but in the group risk industry as well. So if a slowdown in product development or innovation is a bit of a frustration, what do you see in today's market that excites you, that is a positive, that makes you maybe regret stepping back from the industry now?
Well, I think it's when you look to the pretty immediate future as the things that excite me. So, we're fast moving into an enormously technology driven world in health insurance, as well as lots of other places. Increasing use of AI sensibly, particularly in terms of claims authorization, and I think if that's done right, and I do believe that Bupa were doing it right, and had that experience myself, where small claims were being pre-authorized a minute after you went online to register them. When you go back to say what I was saying earlier about service not being great, that's an example where it is great. So I think there's got to be a lot more of that coming. I think there'll be increasing use of wearables in terms of helping and supporting people with their own health. It's one of them standing jokes. At some stage, you'll get a phone call from your insurer that say, "I'm calling you about your heart attack," and you say, "What heart attack?" And they say, "The one you're going to have in 20 minutes." Because the wearable's sending down data that strongly suggests that you're not as in a good place. And I think most importantly, we're going to see increasing use of data and genomics, and I know the genomics one's an interesting one for many people, but if it's used for the right purposes, and that is for early identification of where you might have a problem in the future, so that you can take appropriate action before it becomes a problem, that can only be a good thing. So all the things that are coming down the track very quickly, I think are the things that excite me. And I was saying before I left, because of that type of thing, I was wishing I was 10 years younger to see some of that actually be in there as it was happening, and seeing the real effects of it, rather than watching it as an interested onlooker. But hey, that's not going to happen.
Well, I think we can all find reasons for wishing we were 10 years younger.
Yeah.
You talk there about customer wearables, about sharing medical data, about genomics, all of those things raise questions of trust. Do you think customers are ready to trust insurers with that kind of personal data? But customers will trust that insurers will use that to help look after them and not just use it to load prices. Do you think insurers can be trusted with that kind of data to use it only to keep customers well and not to increase prices?
Oh, I think they can. I think insurers can. And they've all signed up to an ABI code of conduct on this very subject about what data can and can't be used, and same with genomics. So it's sort of they've got to be using it for the right purposes. Can customers trust insurers, or do they trust insurers? I think is the more relevant question. Well, let's be honest about that. A lot of them don't. Quite a lot of them don't. So there is going to have to be a change of mindset, and that can only happen. It won't happen overnight. It has to happen over a period of time, and the ball's in the insurer's court to demonstrate that they can be trusted. But in a sense, it's not like what we were talking about earlier with directional care. When that first came out, customers were, I want to choose where I go. And over a period of time, that pendulum has swung. And I think the same thing could happen with the use of data and genomics. We're in a data-driven world now. Anybody that says that's not the case is just in denial. So, people have got to accept that things ain't the same as what they used to be in that respect. We have to trust each other, I think, as customers and insurers, and continually grow that trust and understanding.
It is interesting that many of us will happily share our personal data with a mobile phone company based in California, but without giving it a second thought, but might be wary about sharing data with our insurance company. And you mentioned things, pendulums shifting. It's interesting when you look at the market today and where we've gone over the last sort of 20 years. We've gone from a period of Bupa owning hospitals and then selling all its hospitals because it didn't want to be in the hospital provider space, and insurers not wanting to recommend or give members the names of specific consultants, specific doctors, because of concerns around liability, to now Bupa and other providers increasingly investing in healthcare provision and seeing them as healthcare providers, not just healthcare funders, and openly directing people towards specific consultants, specific networks, with a focus not on cost but on quality. On an appropriate treatment, and on the basis that if you get the right consultant first time who does the right procedure, even if the cost of that procedure is a little bit higher, the long-term cost of the claim will be less because you're getting the right outcome.
Exactly.
So I guess last question. Obviously you're sort of stepping away from the industry now. There are perhaps people listening to this who are new to the industry, coming into the industry for the first time. What would your words be to those people sitting there, perhaps in a new job in the industry, thinking, how do I get to a point in 10, 20, 30 years time where I get to be in a senior leadership position in this industry? What would your advice be to them?
Well, I mean, what I would say first of all is, if I can do it, anybody can do it. But I mean, seriously, it's a wonderful industry to work in. It's a very, very rewarding industry, and because you're doing good stuff, you're literally helping to make people healthier and happier, and actually saving people's lives. And you should never underestimate that, and that gives you a fantastic feeling. In terms of how to become, how to have a progressive career in it, I don't think there's any great secret. You should be prepared to work hard. The most important thing for me that I've always tried to do is act with integrity and honesty. And I would hope people would agree with that when I say it. And if you can do that, work hard, act with integrity and honesty, you can have a fantastic career in this industry. And I'm a great one for quoting little phrases and sayings, as you know, but I did read one on LinkedIn quite recently that a friend of mine had posted in it, and it said, what you do makes a difference. So you have to decide what kind of difference you want to make. And I would say read that and decide you're going to make it in this industry, and you won't go wrong.
Work hard, act with integrity and honesty. Right? Fantastic advice for
That's
anybody in any industry.
In any industry, yeah.
But especially in this one.
Right.
Iain, it's been fantastic to talk. Thank you so much for your time. I'm sure our listeners have enjoyed it, and hopefully I will see you soon. And to our listeners, thanks for listening. Hopefully speak to you again on another episode of the broadcast in the near future. Thanks very much.
Thank you, Brett.